I really believe we're in a very significant period where the world is changing rapidly, and I think that most people are still missing what's happening. So that's kind of first. That's my overarching thing. And I also want people to understand, like, I am not generally political. Like, I don't care about politics, but we're in a time period where politics are moving quickly. The executive orders that the Trump administration is unleashing, again, which I generally agree with the direction that they're moving. However, anytime you have central planning and you're throwing that onto a free market, you're distorting free market economics. Case in point, just this morning is the new pharmaceutical basically price controls that we're going to see, and that just is hitting the wire right now, that Trump is unleashing. It's a good thing in general because pharmaceutical prices in the US are just massively overpriced and distorted, but it's not a good thing, I think, that we're doing price controls. And
Mm-hmm.
and we keep doing these price controls, and even if you think the direction of the price controls or the underlying purposes and reasoning for price controls is a good thing, it's still distorting the free market. And I'm a free market economist, so I don't like to see that. Okay, so that's all that kind of stuff. So macro, why does all of this stuff matter? I think it matters greatly with where we are right now. People talk about the fiscal deficits that are being run. People are looking at Doge and thinking, is this going to be the answer? I will say that Doge is a drop in the bucket for the amount of fiscal spending that's going to not only continue but to accelerate from here if these tax cuts get pushed through, which, again, I'm a huge fan of tax cuts. I pay a lot of taxes and I hate paying taxes. I think the federal government should get much smaller, like 90% smaller. But the tax cuts that are coming, if they don't decrease major other expenses like Social Security, like Medicare, things like that, we're going to blow out the fiscal deficit. And what blowing out the fiscal deficit means is borrowing money that the government doesn't have. And what that means is we're going to debase the US dollar even more. Okay, so that's like the whole grand scheme of things. One other guiding principle that I follow that I don't see many other people talk about, I know that Lynn Alden has done some work on. She's always like about a year ahead of me on her takes on the economy and where we're going. I'm a little slow, so it takes me a little longer to figure things out. But one thing I just cannot take my eyes off of is if people, and I would encourage people to do this at home, get a long-term chart of the S&P 500 and price it in gold. So SPX divided by gold, and look at a 100-year chart. And if you do that, you will be amazed at these huge cyclical trends that we see. And when you look at that, I would say, and this is the concerning part, is that we are basically back to a period similar to the 1930s, similar to the 1970s, similar to the 2000s. And now here we are at this current age where basically stocks are falling in real terms. So they're falling in terms of the price of gold. And once you have those kinds of momentum shifts, they actually tend to go on for about 10 to 15 years at a time. So this is really remarkable. So it's a time period where I think, we've heard other people talking about this, is U.S. exceptionalism dead, right? Everybody's
Mm-hmm.
pulling money out of the U.S., and so we're seeing that be affected, in the price of stocks and things like that. I think that this general trend of U.S. financialization, I think it peaked back in 2021, at the end of 2021, similar to 1929, similar to about 1968, similar to 1999. And if you ask any person who studies economic history, would you in general say that the 1930s and the 70s and the 2000s, the aughts, were they generally good or generally bad for America, for the American economy? I think most people would say those are kind of bad years, right? The 30s, we think of the Depression, the 70s, the oil
Yep.
embargoes and all that, the Vietnam
Inflation.
War
Yeah.
ending, we got off the gold standard, all that kind of stuff. Kind of tough times, the 2000s even, but even that was sort of distorted because of the blowing up of the housing market. But if you were a tech investor, you just got crushed during the 2000s. I think we are back in, and it's not even are we entering that period. I think clearly when you look at these sorts of longer term charts, we are well into that period where basically peak U.S. financialization, we've already reached the peak, and we're rolling over now. So what does that mean practically? This is a really long answer to your short question, but it kind of encompasses a
No,
lot of
this is
what we were
great.
talking about.
Yeah.
I think for the next decade or so, similar to, and I think probably the best analog that people can like conceptualize is it's going to be like the 1970s. So what happened in the 1970s, right before the 1970s, we had peak Nifty 50 stocks. So there were 50 US stocks that were the growth stocks back in the 60s, 50s and 60s. That basically all you had to do was buy the Nifty 50 and you would just make money. That's just how it was. Similar to how the Mag 7 stocks have been over the last 15 years or so since the global financial crisis. All you had to do was buy the Mag 7 and you just crushed it. But what happened afterwards is we had basically a 14-year period or so from about 68 to 1982 where stocks in nominal terms did this, and in real terms, when you adjust for inflation, did this. They just got hammered, and bonds just got hammered. And the only things that did well were things like gold, other hard assets, and emerging market assets did well if you were pretty good at selecting those. The vast majority, and here's my main concern, and then I'll wrap it up. My big concern for Americans are they have the vast portion of their net worth in 401ks, 403bs, and IRAs, and they're in American stocks and American bonds. And they, I think, are going to get crushed. I think they've already started to get crushed relative to gold. So in real terms, so even if you're seeing a green number, a positive balance on your returns for the last couple of years, in real terms, when you factor in monetary debasement, you're starting to lose purchasing power. And I think at the end of, so 10 years from now, let's get back and do this again in 2035, and we'll see how we are. I think it's going to be very similar to how it was in the early 80s, where people are going to give up on stocks because they had 14 to 15 years or so of terrible returns. Bonds are going to get crushed. I think real estate has peaked and will not recover in real terms as well. So tons and tons of Americans have, VRBOs. They're renting out second, third, fourth, fifth homes. And what has that done is it's outpriced millennials and Gen Zers. They just can't afford a house, especially with mortgage rates sitting around 7% right now. The housing market is frozen right now because the boomers want to sell it for a huge profit, and the millennials and the Gen Zers don't want to buy it from the boomers because they can't afford it. So that's huge. That's massive. And I'm just telling people that you got to get out of that mindset that we were in for the past 15 years of just buy US stocks, just buy treasuries, and you'll do great. That's not the case anymore.
So the devaluing of the dollar is not going to change. I mean, that's been happening, obviously, right? But what like you said, I mean, what people have been doing, obviously, is piling into whatever growth stocks, tech stocks, like, buying second, third, fifth homes, like you said. That's what changes. The devaluing is going to happen, but it's going to show up and rotate into a different market, like you alluded to, hard assets, gold, Bitcoin, things of that nature. Is it commodity, or like what does that look like to you? I guess what does this rotation look like? What's the time span here, and like what are we looking at, and what is it?
Right. So kind of going on with what I'm saying. So there's going to be everybody knows globalization is coming to an end, right? Trump's policies, and they'll blame Trump or not, but this is going to happen anyways.
Yeah.
Trump isn't the guy doing this. The world was ready for this. And so we elected a populist leader like Trump to make this happen. That's history is dictating, right? The cycle of history is moving, and so a populist leader to nationalize and to get away from globalization and to get into a multipolar world, that's just the path we were on. And so again, similar to the 30s, similar to the 1970s as well, these same kind of things that people started to lose their confidence in the US as being this exceptional place where all you had to do is put your money. So all of these foreigners who were investing into the US, foreign central banks were investing in tech stocks in the US because tech stocks were the only thing that could outperform debasement since the global financial crisis. That's pretty astonishing if you think about it. And so what's happening now is those countries, China specifically, and lots of other, people that are more Chinese allies, are by choice and by force are being pushed out of US stocks. And so what people need to think about from an investment standpoint, everything I do and everything I think about, even if I'm right or wrong, comes down to how can I best invest for my clients in my hedge fund, right? I want to make money for my clients. I want to do well. We want to make money. We want to increase purchasing power over time. I think the key is to get out of this US exceptionalism idea and to start thinking about global assets. What that means specifically, I would say, is like the best global asset, as everybody knows on your channel, is Bitcoin, right? There's no
Mhm.
better global free market. There's no better global asset. When global monetary supply increases, which it will, and it will accelerate from here, I believe, that a lot of that flows into Bitcoin. Gold, as we've been seeing, has done quite well. I think we're going to take a consolidation period here for gold, where it's going to take a breather, probably for several months, before it trends higher again, which I do believe it will trend higher again, especially relative to stocks. And then instead of US stocks, I would really encourage people to get into international assets, emerging market assets. Go back and look at charts of what happened. The dollar, basically from 2000 to 2010 or so, the financial crisis, the dollar was on this long-term descent. And what happens then is that actually strengthens emerging markets, relatively speaking, because they have all their dollar-denominated debt. Their lives are getting cheaper and cheaper, which means that their stocks, their equities tend to do better. They have better margins, better earnings, things like that for their businesses. So again, similar to the 70s, I would encourage people, think about global hard assets, Bitcoin and gold being the number one and two primarily. Think about emerging markets, think about international equities over US based equities. That's how I'm doing it in my hedge fund. And I think that we're just in the very early days of this trend. It's only going to accelerate over the next decade or so.
So, Powell and Trump are going back and forth, and you have these like, I don't know if proxy wars. You have these, just info wars. You have all, these people just going back and forth. We got, debates and arguments and wars going on everywhere, right? Whether it's kinetic or it's verbal or whatever it is, inside Bitcoin, outside Bitcoin, all these things going on. Can they realistically engineer jobs coming back? And this is what I was talking to you offline about, or I was alluding to, which is this a smokescreen for something else? Are they going to try to revalue the system? Like, does Trump get it? Like, the people he's around, the Lutnicks and the Bessents, like, do these guys get it? And they're playing 4D, 5D chess, where it's like, hey, this system is literally done, guys, and we can't just come out and say, oh yeah, hey world, like, we're going to revalue everything to Bitcoin or to hard assets or to gold or something. Like, is this them basically playing the hand without playing the hand and saying, oh, we're going to, because at the end of the day, how many jobs can they actually engineer to come back here? It's a great campaign promise, but what does that actually look like? Can that happen in 4 years? Can they actually do that? How does that play out?
So the unsaid thing that I've been observing as I've been really reclusive and just watching, I watch everything Besant
Mm-hmm.
says, everything Lutnick says. I listen to Trump, but I think you get more signal from these other guys
Yeah,
who kind of know what's going on a
agreed.
little bit more. Um, and again, I'm not anti-Trump, just so people know. Like, I think he's a get her done kind of guy, and I actually
Mm-hmm.
respect that. And they're finally running the U.S. Federal government like a business. They're looking
Mm-hmm.
at return on investment. They're eliminating, fraud,
Yeah.
waste, and abuse. That's fantastic. And both sides of the aisle should be celebrating that. By the way, like, it's ridiculous to not celebrate getting rid of abuse and fraud and waste. But anyways, that's a side subject. Um, what is unsaid, but I think is the elephant in the room, is I think that our war machine has been decimated by everything. That's so when we lose our manufacturing, what we've also lost is our capability to go to war as a major country. And I believe that because we are in this sort of fourth turning type environment, they're clearly setting up China as this adversary, right? Everybody now knows that China is our enemy and our chief adversary. I hate that, by the way. I hate it that, like, why are we going to get the people involved in some war with some people that are generally good people? It's these
Mm-hmm.
government classes and these things they do. But during fourth turnings, you need to unite the people in a common goal. So we have this common enemy. And again, I don't think of China or Chinese people especially as the enemy. I am not a fan of communism for sure, but I'm also, not going to pretend that we're not doing central planning here in the U.S. as well. So um, when you look at the strategic lines of business for the United States, which they do make clear, right? We talk about semiconductors, rare earths, energy production, manufacturing, steel, automobiles, drones. They've mentioned all of these as super important technologies and manufacturing abilities for the United States. And we've been sort of earmarking those as we're going to protect those and bring them here as fast as possible. Trump wants to get the manufacturing base here as quickly as possible, so they're offering a lot of incentives for that. Like you can recognize all of your depreciation over a year if you can build these businesses, these manufacturing plants as quickly as possible. I think it's because similar to the 1940s, similar to post Pearl Harbor, we're rapidly ramping up the war machine.